Good afternoon, everyone. Hope everyone's having a great day. Welcome to our weekly Wednesday webinar. My name is stockdarts. You can find me on Twitter with the name stockdarts. You can find me on YouTube under the name stockdarts, or you can visit patreon.com/stockdarts, where you can find more of my trade ideas or more of my thoughts on the trading process in general. I also repost every Wednesday webinar on there in case you ever missed this or want to review it, as well as on YouTube. Let's go ahead and get started. We're going to do the usual. On Wednesday webinars, we always go ahead and take a look at the S&P 500. We look at the NASDAQ Composite, the Dow Jones, and the Russell 2000 to get a gauge of what's going on in the markets, how we should be trading this type of environment. And then we look real quick at the U.S. dollar. We're going to look at oil, gold, and silver. And then once we finish kind of analyzing the markets, we're going to go ahead and take a look at any chart requests that those of you guys that are in here have. If you're in here, you can already put in your stock, your chart request. Just put in the ticker, and whether you're trying to go long or short, maybe you're already in the name, you're trying to figure out whether you should take some profits or stop out. Just describe whatever the situation is. That way I can give you my look at the chart, especially as sort of how it applies to what you're looking to do. Other than that, let's go ahead and get started. Keith, we will definitely look at UUP, especially because obviously we're going to look at the U.S. dollar. And then we'll get to your question or to your thought process, your thought on that. Let's go ahead and get started. We had a big week between last Wednesday and this Wednesday, and last Wednesday was an FOMC day, and the Fed didn't change anything. However, we're down from there, and I think that we may have finally seen a nice change in market character. Well, we obviously have seen a nice change in market character now. Am I ready to call a top? No, not yet. I don't think that we are at the spot where we can say definitively that we've topped out for the time being. And again, if I say something like that, like hitting the top, I mean short to intermediate term. I don't mean long term. I think long term we're still in a very strong bull market, and that's not going to change until we get some big changes with FOMC, with the Fed, with interest rates, or we see some bigger changes through our economy, through earnings reports and all that, which for the most part this quarter was actually a pretty good quarter as far as earnings reports go, and so that didn't impact the market negatively at all. And I think at the moment the only thing we're really seeing is some selling pressure based off the fact that we're at all-time highs and at a pretty significant supply levels or a distribution area. But other than that, I don't think that this is anything major to get too worried about. But I will say that we have finally seen a little bit of a shift in character, and we're finally starting to see some selling pressure, which I've been hoping and anticipating, and we're finally getting a little bit of it. And I think this will go a long way towards giving us better entries into trades in maybe in a couple of weeks. I think it's going to take a little bit of time for these things to sort of realign properly. But I think it opens up the table now where the market can move in a couple different directions rather than just upwards and trying to entice people to chase the price action higher. If we take a look at the S&P 500, we can see obviously we had this really tight, this real strong move up where we just weren't getting any selling, and it was a very tight range as the price action just sort of trickled upwards, right? Let's change that trend line to solid. And you can see there's not a lot of selling pressure, and we just kind of climbed slowly and slowly higher, trying to entice people to chase higher into the highs, right? So trying to get buyers to step in and buy at resistance to hopefully push the market through. And as I mentioned last week, it wasn't a good risk reward scenario, and it really, even though you expect the market to continue kind of going higher, you want to go with the trend, you also want to set yourself up in a spot where you have good risk reward and the timing is right. And I don't think that, as we were discussing last week, the timing was right to go long. Now, I didn't think it's really a good idea to go short. The reason for that being that there's so much demand in the market this year. If you take a look at what we've done from the beginning of 2019 up to now, there's been very little selling pressure and very few moments that were worth shorting. Even when we did pull back slightly, for the most part, they were a little bit difficult to time if you were trying to get a short. And the same thing would have happened even here, where we had the initial move down, and then we had a hammer and a strong move up, and almost sort of was pointing into the direction of continuing higher. And then we finally had, over the last couple of days, we started to really lose traction and started to really lose ground. And I think now we're in that spot where often happens when you have a strong trend to the upside is you find support at the 20 initially, and when you lose it, you start doing this dance in between the 20 and the 50 period moving average, and you go back and forth. And what we're doing right now is really just trying to figure out if there's still more selling pressure from these all-time highs, or if the bulls that have been sort of riding this train all along, particularly the smarter ones that didn't want to chase the price action higher, if they're ready to step in now, or if they want to wait for a little bit of a lower spot. For those of you that have been here over the last couple of weeks, we've been kind of analyzing once we get a dip, where we want to look at buying the dip. And I think the ideal area, as far as where we could consider strong support, is this 281 to 280 area, right? It was kind of a critical area last year, became a strong resistance zone as we sort of tried to stave off a further breakdown in the markets, which we eventually got at the end of the year. And then when we kind of came back to it, it was actually the only price level that we actually spent any time on this year, first below it and then above it. And I think a move back to that level would probably be a good buy the dip opportunity. However, we may not get that initially. I think initially we're going to probably find support here at the 50 period moving average, and we're going to get a bounce. And once we get that bounce, I think we'll get a better idea of what the next phase is, right? So last week I mentioned that after FOMC and after earnings, we would get a better idea of what to expect out of the markets. I think at the moment, my conclusion to that is that we're not ready to move higher, right? I think that we're still in the process of building out a big trading range, right? And this is a theory that I've been, or a thought that I've been kind of pushing for a couple years now, ever since the beginning of 2017. I had sort of outlined this idea that we're going to be in a broad trading range, a big consolidation range, very similar to what we had from 2015 to 2017. And for the most part, it's played out, but it's played out in a very weird state, right? Because last year we had a very strong beginning to the year, made it look almost like we were just going to continue ramping up and just continue climbing forever. Then eventually we had some selling pressure, but then the middle of the year actually was a very strong trend that was very easy to trade and very nice and orderly. And then, of course, we finished the year off with huge volatility and actually broke down below that range and made it seem almost like we were topping out instead of continuing this broad range. But then at the start of this year, we've made this strong move all the way back up to the top of the range. Now, typically when you get a move like this through a range, you don't just continue blasting on through it. You have to kind of backtrack and retest some of that because there's a lot of sellers that are waiting. Even though the bulls for the most part have outnumbered and overwhelmed the sellers, there's still a lot of selling pressure in this area because there's a lot of price memory here, and there's a lot of traders that got burned holding long and wanted to get out, or just think that this is too high and don't trust this market. And so despite the fact that we've kind of blown through most of that range, there's still a likely possibility that we need to come back and retest and make sure that there's still more buyers outnumbering the sellers that were waiting here, and they sort of got overwhelmed in that first push, but eventually have been able to kind of make up and finally start to put some selling again. Now, I think that there's still the possibility that we find some more buyers and eventually push through, and maybe that the extent of this trading range is what we just saw. But I suspect that we probably need at least another month or two to sort of really test this 292 or 293 before we're ready to move on. And there's always the possibility that we need to retrace more of this move. And I think as long as we don't come back to the bottom of that range, I think it's still a fairly bullish scenario. And I think even if we go to the bottom of the range, I think it's still maybe indicative of a more neutral scenario rather than a market top and sort of impending rollover. So I think for the moment, things are still pretty positive in the intermediate to long term. It's just the short term right now that we're sort of having some trouble with. And I think it's because of the way the prices behaved this year and how quickly we've just sort of climbed through this entire range, that a lot of traders that are trying to be patient haven't really gotten a good opportunity to enter because they haven't had a lot of orderly patterns that give them good risk reward and give them a good timing as far as an entry is concerned. I think really we've had maybe two scenarios, at least as far as the way I like to trade, right? We had this one triangle / pennant that we had around the 263 level, which was a pretty orderly pattern and a nice sort of consolidation off of the big sort of run up to start the year. And then we had this nice little falling wedge that also was a nice entry signal, particularly the way it sort of we had the nice breakout and then the pause to let people sort of enter before we began this train all the way through to all-time highs. And I think at the moment it's too early to really look at this as saying this is another possible entry. But there is the possibility that we are forming another wedge, which will eventually lead to a move up. Now, I suspect that this next move up is going to fall short of all-time highs, and is really going to be more a matter of testing this 292 to 293 area. But we'll revisit that once we go through all the charts and try to figure out what the next step is, and see if maybe as an aggregate, once we see what all the markets are doing, what we can really suspect. But at the moment, we're doing the 20 and the 50 dance, which is when we just sort of chop between the two moving averages. And usually this resolves to the upside, not to the downside, at least the first test. It doesn't always occur that way, but a lot of times what happens, you go back and take a look at what happened last year. Usually when there was a pocket of price action in between the 20 and the 50, it would resolve a little bit higher until eventually we had that third or fourth move where we just broke down completely. And I think at the moment, considering it's well, I guess it's already the third test, so maybe it does need a little bit more time in this area. But typically this resolves to the upside, and then we'll see what happens next, because a lot of times when you have a channel ascending, then you have a breakdown, that first test up is usually met with a lot of selling and usually leads to move back down. It doesn't always occur, but that's oftentimes what happens, and that might be what we need in order to just sort of fill out this area, which I mentioned last week and the week before, that we might need to spend some time in the upper edges of our range that we spent the last year and a half now in, and build up some more pressure and find some new buyers to be able to really push through all-time highs conclusively, and with enough pressure to sort of leave it behind, right? Look at it like a rocket trying to leave the atmosphere. It needs a certain amount of pressure before it can really escape the atmosphere. I think that's what we're trying to build towards if we want to continue ramping up and continue going through highs. Now, there always is the chance that we already built up enough pressure in this area. I don't think we have, but there always is the chance. And if that's the case, then we should find support at the 50, and we should quickly get back and do this scenario. But instead of falling back down, we either just push past it or we sit there and sit above the 292 area and then start to really break out. Now, if we spend maybe 4 or 5 days trading just around the 292 range, then I think that sets up for a nice breakout, and a breakout that we can trade with good risk reward and with good timing. If we just continue climbing higher in this manner, it's going to be a little bit more difficult, but there is a potential entry once we realize that this trend has been broken. It's not an entry I'm excited about, but it's one that I wouldn't necessarily criticize someone for taking. And that could be a possible way of playing this momentum to the upside. Now, if we do start to pull back a bit further, well then what I'm really hoping for is we get a nice consolidation pattern and a nice reversal pattern around this 280 level. At that point, we have plenty of overhead resistance, but we have a decent amount of space to be able to get a good reward off of our trade, even without breaking to new all-time highs. And at that point, we have a very tight stop. We know exactly where we should stop out in the market, and we know exactly what we're looking for as far as our first and measured move, and then see if it can build up enough steam to push past it. So, unfortunately, we don't have as much clarity as expected as far as finding new trades as what we were hoping for last week. But I think we have clarity in what kind of environment we're in right now, and I think we're still in a range-bound environment, and I think that's the big takeaway we can get from last week to this week. Now that we've sort of gone through most of earnings season and we've gotten a most recent FOMC statement, is I think the market is range bound right now. There are a lot of people that might still be thinking we're going to just, this is just a temporary blip and we're going to break out to new highs. I suspect at this point that we need more time. Now, that being said, I did notice a shift in character with IWM, and I mentioned that in my Patreon post on Monday, where it looked like IWM was ready to play catch-up. Now, it stalled out a bit, but it is holding up a little bit better, and it could be that we just get some rotation into different areas of the market as we contend with these highs and before we build up enough steam to try to push past it. But I think for the moment, at least from here for the next 2 or 3 weeks, we can assume that we are in a neutral market right now and need to grind around this price area before we head higher, or we need to explore a little bit lower before we really start to trade neutrally. All right. I don't expect us to lose 280. If we do lose 280, maybe we test the 200 period moving average, but that would be about the extent. If we lose that, then something major happened. Whether it's something along the lines of some issue with Iran that started to creep up yesterday, or more serious trade issues with China. But we'd have to have some ugly news come out of left field in order to push us past these levels. So I don't think that's not really a concern for me right now. For me, a concern is the real concern is just how do we behave around this price area, and what are we looking to do as we sort of test these highs, and what form is this price action going to take? Now, if we look at the Nasdaq, you can see a very similar price pattern, right? We had the strong trend upwards, and then we finally lost this key level around 187, and are back below it. Now, the Nasdaq is still the strongest, really, of the indices, and you can see at the moment this is actually a potential reversal pattern, right? So there is a chance that we just bounce right off of here and get back above 188, and then start to try to maintain price action in this area. And if that happens, then I think it's still bullish for the markets overall. And I might have to reevaluate my stance on a more neutral market that I think that we're maybe in. So if you're bullish, or if you're looking for the first sign of bullishness, you want to look at the Nasdaq, and you want to look at the Qs, and you want to see price action stay above 187. And if that's the case, then it's confirming. It really is still confirming that this breakout was legitimate, and that it's ready to continue moving higher. So this is the spot that you really want to watch as far as continued bullishness, and this is why I'm a little bit hesitant to really full out say that we are ready to kind of explore lowers, because the Nasdaq is still holding strong, and as long as it does, it's been leading the way through most of this year. And if it continues to lead higher, then a lot of the other indices might have to go ahead and follow suit. So this is one to keep an eye on. Now, it hasn't come back to test the 50. There's a long way to go before we test our major support. I don't know that the Nasdaq gets there. I think if the S&P 500 and the Dow Jones start to hit these respective levels, the Nasdaq will sit around its 50 and maybe trade an open space before it tries to make another move back up. We'll see how we finish the next couple of days, and whether the Nasdaq can get back above 187. If we get another red candle and start to explore the 50, I think that will again be more indicative of a neutral range. I still don't think it'll be a top, but I think it'll be more along the lines of the market needing more time to really digest this area and to retest and again look for buyers. And that's what we're looking for here. When we look at these trend lines, when we look at these moving averages, we're trying to figure out and we're trying to gauge what the attitude of traders is, right? And what levels they want to buy, what levels they trust and which ones they don't trust, right? So at the moment, what we are looking for is we want to see if people trust these all-time highs and they think that we are supposed to be here and supposed to be trading above them and not below them. So that's what we're watching for right here. And based off of today's price action, I don't think we have enough yet. As you can see, we bounced right to that level and then we've sort of stalled out. We'll see what happens over the next couple of days. And whether we can push past that or not. We can look for, one of the things we can look for is see if we print another couple of days in this range, and then whether we push past it or whether we stall out. Give me 1 second. All right, sorry, folks. All right, so yeah, so there's a chance that we print another couple of candles in this area, and then that sort of forms a bear flag, but it could also just be a consolidation just below 186 and ready to push past it. So I think for the moment we're kind of in a holding pattern where we want to see what the Nasdaq does and see whether it's ready to push past this 187 range or whether we need to come back and test a little bit lower. I think again, of the four indices, this is by far the most bullish one, and will be the first one that gives us a hint as to whether we're ready to continue pushing or exploring these highs, or whether we need more time to sort of settle down and trade sideways. So it's been a while since I hear anybody say this because we've been in such a massive market, but it used to be the old saying, sell in May and go away, right? Where typically in the summer you have lighter volume trading, and it's typically more range bound, as a lot of the big hedge funds or the big traders go on summer vacation and just sort of relax. And it's not a cliche that I follow too much as far as trading is concerned. I feel like for the most part we've gotten, especially in the last few years, we've gotten plenty of strong price action in the summer. But it is something that maybe some people are watching right now, is to see what happens as we head into these next couple of months and into summer, and whether the volume dies down enough where we just sort of drift around this range that I was discussing earlier, maybe the upper half of last year's range, and just sort of continue to hold above these highs. If we go back again and look at the last time that we really explored and pushed past highs, this was in 2016 to 2017, right? And if you really look at how long it took, we started to break out in July, and it wasn't really till December that we confirmed that we were ready to push higher off of that range, right? So just to sort of point out a situation analogous to where we are now, right? So we had this horizontal range, and when we finally held above that range and sort of confirmed that this was now, that the previous resistance was now support, it still took 6 months before we built up enough steam to break out of it. And that is, if you don't look at this and say, well, the last time it did this, it actually ended up pulling back. But assuming that we do get confirmation that we're ready to move higher, it might still be a scenario where we need to spend another month or two at least above this range before we're ready to push higher. Because again, if you just take a look in the long term at how quickly we just sliced through all of that, this is kind of unsustainable to continue to the upside. So I still suspect that we need more time trading sideways and testing this range. But like always, you just have to follow what the market does, right? I have my ideas of what could happen and what should happen. But in the end, I'm not in the business of trying to predict what's going to happen in the markets. I'm in the business of reacting to it and trading off of it. So if the Nasdaq wants to move higher, then I'll go ahead and follow some tech names up with it. And if we trade sideways, then I'll just watch and play more range-bound plays, maybe do some more covered calls, and do some condors and stuff with options to take advantage of the more neutral range. But at the moment, I think that the Nasdaq is our tell if we want to look at the bull side and see whether we can continue higher. That's pretty much it. I think the key level obviously is 187, and the next key level is 178, and then anything between that is probably going to just be the around 182, which is a 50-period moving average. Now we move to the Dow Jones. The Dow Jones, as you can see, is a lot more neutral, and even I wouldn't say bearish, but definitely a lot weaker. We never tested all-time highs, and our consolidation range to try to push up to them failed, and we kind of pushed back, and we're actually below the 50, right? So here is another sign of the market really wanting to trade sideways. And I think when we look at them all as an aggregate, we'll see that despite the fact that the Nasdaq looks like it wants to push to new highs, the other indices are actually kind of struggling with their resistance levels, which is why my interpretation of the price action is that we're likely to trade sideways. Is because as a whole, the entire market's not ready to push through. And I think it's painfully obvious with the Dow Jones, right, where we not only lost this 260 area, we lost the 20 period, we lost that 260, and we lost the 50, and now we're kind of back into this range, which was the range that we sort of spent the last 2 or 3 months sort of confirming a breakout of this 253. Now overall, I don't think it's bearish yet, because again, it's still bullish in the sense that we're above this breakout zone of 255 or so, and we're just sort of attempting to sort of push through all of this supply and all of this selling pressure as we continue to make our way higher. So, in a way, this is just a more orderly sort of slog through these prior resistance levels, as opposed to the Nasdaq and the S&P 500, which just sort of sliced right through it without any kind of concern. You can see the Dow Jones is having a bit more trouble, but overall, it's still sort of making its way upwards. It's not like it's been. You can't say it's a bearish chart when we opened up the year at the 216 to 215 level, and we're all the way up at 260. But overall, it's been a lot slower and a lot more methodical as it kind of goes through these levels. You can see there's been a lot more backtracking, a lot more sideways price action, and I think overall, again, it's just been weaker in general right now. Is there any major takeaways we could sort of figure out because of this? Not really. I think it's just a matter of sector rotation and just weakness in some of these names. Some of the news that has come out on a couple of them, and just overall in general, these names. Again, the Dow Jones doesn't have as many names as the others, right? So it can be more impacted than others just based off of a couple of names behaving weakly. And on top of that, it's an area that money's not flowing to right now. It's kind of flowing towards the big tech names, and until we see a shift in that, we can expect the Dow Jones to sort of struggle a little bit behind. Now, what can we expect here? As you can see, we lost a key level around 261. So a lot like I mentioned with the S&P 500, I think that the next bounce should find a lot of resistance and should fall short of our previous highs. And I suspect that this is going to be the case with the Dow Jones, where when we get a bounce, it will be short-lived, and then we'll probably explore a little bit lower. There's also the chance that this candle, I mean, again, just because we have a green candle today doesn't mean that we found our ultimate support and are ready to bounce. It could be that we had lower and tested 200 period moving average. And I think as long as we stay above 252 overall, we're still in a healthy state in the market. We don't want to lose this area, this 252 to 251 in the Dow Jones. I think if we do lose that, then that's kind of a negative, and that could be the first sign that we need to start reshifting our stance on the market, and that there is the possibility that we need to come back all the way down to the bottom of that range. Again, if you take a look at it on the weekly chart, you see where we are. There's always the possibility that we've hit the top, and then we're going to have to come back and test the bottom of the range again. Especially when you consider that the last time we tested the bottom, we broke through it pretty drastically. So I don't want to be like a fearmonger and say that we're at a top and we're ready to drop down. I don't think that's where we are yet. I think if we are going to head lower and test this low, we'll get plenty of warning signals, just like we did last August and September. So I don't think that's something we need to worry about yet. But keep in mind that is a possibility, right? Just like it's a possibility, of course, that we just break out to new highs. But I think if we do break out to new highs, it's not going to be the Dow Jones that does it. I think the Dow Jones has a lot of work to do before it makes its way up. So the key level, again, for me is 252. If we find support here, I suspect that this is going to be good resistance and could even possibly be a shorting opportunity if someone is aggressive enough. I've been sort of hammering this point over the last several months that I don't think we're at a spot where we want to short the market. But once we get our initial bounces here, especially depending on how the Nasdaq bounces and what the other two do, but if the Dow Jones and the S&P 500 have these weak bounces into these tougher levels, I could see someone wanting to short that. And while I don't know if I'd go ahead and take that, I wouldn't necessarily criticize someone for that either, because at that point we would have enough erosion and price action where we can expect to move back to that level and possibly down to our next resistance or support levels, depending on the nature of the bounce that we get here. And I think that's really it for the Dow Jones. It's basically just a weaker version of the S&P 500 right now, and I'm not looking to trade anything in it, and I'm not really gauging a lot based off of what the Dow Jones does, because I think it's more important right now what Nasdaq is doing and then what IWM is doing, which is our next one. Now, interestingly enough, with IWM, it actually looked really good 2 days ago. It doesn't look that bad even now, but it looked really good. If we just go back and we just look at what happened on Monday, it looked like we had strong confirmation that we were ready to push past 158. And those of you that were here last Wednesday remember my idea that it might be that we need the small caps to play catch up. Obviously, you take a look at what the other three indices were doing. They're all at all-time highs. We're close. The Dow Jones fell just short of it, but it did come very close to all-time highs. But you look at the Russell 2000, and it's nowhere near all-time highs. And there's this big vacuum of price action until we get to really a more important level around 165, 167, 168. So there's a lot of room for upside here if we could get some momentum coming into the small caps. And it could be that if the S&P 500, the Dow Jones, and the Nasdaq have to trade sideways and sort of contend with the amount of supply and distribution that right now seems to be holding at all-time highs. Well, it could be that the money rotates towards the small caps and looks for a strong move in them, right? So I've been focusing a lot on looking at small caps this week and trying to figure out if I could find some momentum plays to the upside on them. And I found some charts that look nice on Monday. Now, some of that is obviously changed with the candle that we got yesterday and then so far what we've done today, because we're right back into this muck. In between, we're below our 20. All our moving averages are still kind of curled up together. This is still a bullish scenario if you look at the moving averages and the pattern that they're forming. But we need to get back above 158 to 159, and we need to have an explosive move through that level. And I think if we could get that, we might get a scenario where the small caps rally while the other three sort of stagnate. And I think that would be ultimately the most bullish scenario for us as traders as far as giving us trading opportunities that we can hope for in the next couple of weeks. Because if all the markets move to highs, then what we're going to be doing is again looking at charts that are still sort of overbought and still sort of stretched out and still have kind of rough risk reward unless you're really good at trading bull flags or momentum at highs, and are going to be difficult because again you're going to feel like you're chasing price action higher through resistance. But if we have some of these indices sort of just trade sideways and we have the small caps sort of pick up some steam, well then we have charts that have been trading in nice consolidation ranges and are starting to peek through them and have plenty of room to the upside. So that's the scenario that I'm hoping plays out. It may not happen, but that's kind of the one that I'm looking for and hoping works. And if not, I'll obviously adjust my stance. If it's going to be the tech names that just continue ramping higher, then I'll start looking at those a little bit more. If it's going to be another area, then I'll do that. Typically, the most important thing to do, of course, as always, is just sort of adjust and sort of react to what the market's doing. But this is one of the scenarios that could end up working out, is if we could get some bullishness on IWM, even if the other indices don't. And it might not happen that way, but that would be a nice way of hopefully it could play out. Now, if IWM continues to act weakly and pulls back, then I think that it could be trouble overall in the markets, because it would be indicative of more selling pressure across the board. So we don't want to see, and it's pretty close, right? The 200 period moving average is here at 155. So if we lose that, then I think that we have a shift in character here. And we're starting to actually see that already. I'll change that. I'll kind of reappropriate this trend line here. We're starting to actually see a little bit of loss of momentum here. And if we kind of lose this 200 period moving average, then we're kind of right back to where we were, that breakout range around 152. And that's actually trouble, right? Because that means that while the other indices were able to kind of push to new highs or retest, IWM couldn't really get out of its way and is kind of signaling that we're ready to pull back and test further. And I think that would be indicative of the other indices having to come back and seriously retrace a lot of the move that we had this year. So if you're looking for bearishness and you're trying to figure out the first sign of more selling, then what you want to, what you're looking for is for IWM and how it behaves once it kind of heads below that 200 period, and whether it just sort of sticks around there and tries to bounce again, or whether it comes all the way down to 152 to 150. At which point, it's a critical zone that if we lose that, then I think it's indicative of the rest of the markets, not necessarily rolling over and topping out, but definitely having to kind of retrace a lot more of their move. Because again, the small caps have been weak several times throughout the last decade, and the market has usually been resilient enough to push past them. If we look at that same sort of range that we spent 2015 to 2017 in, you can see that the small caps actually did break down quite decisively And in the end, they didn't bring the markets down with them. The markets ended up pulling them up with them. And even last year, they had a very sloppy market compared to what we were seeing out of the S&P 500 and the Nasdaq. So if we get renewed weakness in IWM, I don't think it's necessarily the end of our bull market and enough for me to sort of say that the market rolled over. But it is going to be a sign that the other indices are going to have to take a lot more time to sort of rehash some of the prior levels and try to pull the IWM and the small caps with them. So that's the four markets. I think it's still kind of up for debate, but I think for the most part, I've kind of I'm kind of under the assumption right now that we need to trade sideways, and so what I'm looking for is more neutral range plays and more of a sector rotation type of strategy, where I'm going to look for I'm just looking for different sectors that could be in a different state compared to the market, and it could be that we just need to trade sideways. And if that's the case, what happens is different areas take turns going up and down, like a little carousel, as the market just sort of churns sideways. Now, if we look at the U.S. dollar index, and this kind of goes to Keith's remark, when the Fed eventually cuts rates and we go to QE, do you think it's smart to short UUP as they're printing money? I don't think the Fed's going to cut rates. Again, I'm not really an economist, and I'm not real good with fundamentals, but I think they're just holding off before they raise rates. I don't think they're at a spot. Why would they cut rates when we're at highs? I don't think we're at a spot where they need to think about quantitative easing or they need to think about cutting rates. I don't, unless I'm wrong, I don't think so. But I don't think that's a concern right now. I think that it's more along the lines of they're waiting to see when they could raise rates without scaring the market into selling off again. Because it seems like every time that they hint at it, we have a strong sell-off, right? It's because I feel like in general people don't think that this market is ready to run on its own, and this kind of goes back to this idea that I've proposed for quite a bit over the last 5 to 10 years, which is that a lot of traders are very distrustful of our stock market right now, right? They were burned in 2007, 2008, and a lot of the rally that occurred after that was really just the Fed propping it up with quantitative easing. So a lot of people feel like a lot of our bull market has been based off of smoke and mirrors. To which I say, you know what? If you own the stock, it's still counted. It's still real money. But a lot of people still distrust it, right? And so what happens is every time that we start to raise rates, they think, well, that was the only reason the market's going up, so we're going to go down again, right? So I think at the moment they're more concerned about when they can raise rates. I don't know that they're concerned about cutting rates. I didn't pay attention to what they said last time, but I don't think they hinted at cutting rates. So I think for now, that's not really a concern. So as far as your idea of shorting UUP, it would have to be based off of something else, right? And as you know, I only look at technical analysis. I try not to let fundamental ideas or these sort of macro thesis type of trades affect me. I try to just go off of the price action. So I think a lot of times the price action tells you what the underlying fundamentals are anyway. So I would be basing it off of that. And I don't think at the moment UUP is something that I'm looking at short. And I think, again, the big reason for that is the euro, which we're going to look at in a second. If we look at UUP as a whole, we are in the process of consolidating. And you look at it really, we're in a strong channel upwards, right? And we just broke through a key level around 26. We kind of came up, got a little ahead of ourselves, and are just trading and consolidating. And this usually resolves in further momentum to the upside. And if we take a look at the major cross, the euro versus the US dollar, and I think that it's still in the process of continuing to break down. This was the trade idea I discussed, I think it was 2 weeks ago, where it was a perfect shorting opportunity. Worked out great. Last week we looked at the possible bounce back up, and on the Fed day, it came right up to the trend line and failed. And since then, has been kind of struggling. Now it is holding. It is holding at a decent level here. But if it loses this, we've got another short. And again, this is the euro. So this is basically bullish the U.S. dollar. Every breakdown means that the U.S. dollar is doing better. So we're at a spot here again where any more downside and we get a new leg down, which is a new leg up for the U.S. dollar. So overall, until we see this change, I would expect to be long the U.S. dollar. Now, if you want to short the U.S. dollar, then what you want to see is you want to see the euro break this red trend line, and at that point, it's got room to the upside to come back to just this 113 to 114 area. But at that point, that should be a major resistance level. And again, this is a level we've been heavily harping on over the last few weeks. Again, I know not many of you guys are forex traders, but this is a major level as far as the euro and the U.S. dollar is concerned, and we've had a pretty strong breakdown of it. So I think until we see a shift in that, I'm actually going to be bullish the U.S. dollar, and I need to see something change before that's going to change my stance on that. Now, if we look at the U.S. dollar versus the Canadian, this is also bullish. Now it is struggling. This 135 area. You can see we had some wicks, and now we have wicks a little bit lower. But overall, this is still just a bullish consolidation as it holds and tests the breakout of a previous consolidation, which again was just above a nice reversal pattern, right? So overall, this is all bullish, and until something changes, we have to assume that the trend is up. And if it does change, we'll be able to see it once it starts to lose these lower levels. If we look at the U.S. versus the yen, I think this is the only one that's a little bit different. And this is indicative, I think, of yen's strength. But overall, the U.S. dollar has lost a lot of ground versus the yen. And I think this is the only real chink in the armor as far as the U.S. dollar is concerned, at least as far as what I like to look at. And it's lost a lot of ground, but it is back at support and is likely ready for a reactionary bounce to kind of come up. And then at that point, it probably becomes a good short for someone if they want to go long the yen, somewhere around this 111 to 112 area. But that's a little bit ahead of ourselves right now. It's not even reversing yet. But the idea is that it should find some support here and then see how it behaves once it finds support there. But I think overall, the U.S. dollar is still in a pretty strong state when you look at it versus the euro, more importantly, and then maybe even when you see it versus the Canadian. So I wouldn't be too bearish right now on it until a few things change, and most importantly, what that euro chart looks like. Okay. Now, if you look at gold and silver, interestingly enough, they also moved down on the Fed day, and then they kind of made a move back up, and you can see there's a big candle today, big volatility as it tried to break above this 121 and failed. I think this is a good bearish play here. It's an easy stop if it comes back above 122, and there's room down to about 119 at the very least, and possibly all the way down to the 200-period moving average. And based off of what we just saw with the U.S. dollar and what I think is probably continued strength, I could see these precious metals going down a little bit further. Now, SLV never even made it back to the top of that range, and it continues to just sort of gain volatility as it just sort of sloppily moves downwards. I think overall neither one of them are really worth playing, and if anything look bearish to me compared to what we're seeing on some of the other areas of the market and commodities in general. With the strength, and particularly again, if we see the euro lose this, which indicates more dollar strength, I expect GLD to kind of break down as well. And then finally we have oil. Oil actually lost a lot of momentum over the last couple of weeks, and it's back to the bottom of this channel. And I suspect that we'll get a bullish reversal here. It's the first time it tested 200 and the 50 period. It's the first time in a while that it tested the bottom of this trend line. I suspect that it should bounce here and kind of make its way back up to the 63 to 64 range. And then from there, we'll see whether it's ready to really roll over and break this channel more decisively, or whether it needs to go down. Now, obviously, it could roll over here, but that's my anticipation is that it should try to break out here and start to make it, start to trade higher. If it loses this, then I think it can make it all the way down to the mid 50s, and that would be a pretty big shift in oil. But I suspect that it's going to try to find some support just based off of where it is on the chart and what it's done in the past. So this might be a spot here. If a lot of oil names retraced, they could be setting up reactionary bounces into their previous levels. All right. So that's oil, gold, silver. Um, like I said, Keith, I don't know that I'm expecting the U.S. dollar. I'm not expecting them to cut rates. I think if anything, they're still looking to raise rates. So I think in general, it's still a bullish play for the dollar. One other thing I want to point out is a lot of times the dollar will rally or it'll drop in anticipation of a rate hike or a rate cut. So a lot of times when they do cut them, it becomes a sell the news event, or if they do hike them, it becomes a sell the news because the dollar sort of moved into the move already. Okay. All right. So that covers it for the U.S. dollar, for oil, gold, silver. If any of you guys, again, I know not too, I don't think any of you ever, or if any of you do, if any of you ever have questions with forex, feel free to ask me. You can get some nice moves off of it. Sometimes it's easier for me, it's easier to analyze than stocks. It does the same thing. It's just price action. But sometimes to me, it seems like forex moves in a little bit more orderly manner and doesn't have quite as many false moves. It's a good spot to look at, especially if you're, like I mentioned a few weeks ago. Sometimes the market doesn't give you many good trades because of what state it's in, and you could sometimes find trades in other areas like forex or like cryptocurrencies, and they can give you good trading opportunities when you're not seeing them in the overall markets. All right, let's move on to the chart requests. Also, if you don't know about forex or you don't know how to trade options and you want to learn, well, go ahead and ask me. I do mentoring, right? You can visit me at Patreon. You can message me there. You can message me on Twitter. And I have mentoring packages that I can offer. I can do one-on-one mentoring. If it could be just one session, or if you want to just say, hey, I want to learn more about forex, can we do like 3 or 4 sessions and go through that? And I'll we could do something like that. So if you ever want to kind of improve yourself as a trader, learn any sort of aspect of the market, whether it's options, whether it's futures, feel free to ask me. I'm more than happy to help people one-on-one. It's been a while since I do any kind of group thing, but if you are interested in a group thing, just ask me, and I'll go ahead and set something up. All right, Ray, you are looking at Kirkland, gold miner. Funny enough, you're looking to go long, and I just mentioned going short, but this actually looks good. I don't know. It's kind of interesting. This is actually doing pretty good when we look at the GLD chart. I'm not excited about gold right now at all. But this actually looks good. Now, I don't know that I'd go long right now because it already kind of had the long move, right? And at this point, the problem now is the risk reward is not good here. So here's my 2 trend lines. Basically, tell you everything you need to about this chart, the price action, at least as far as the last this year. So 32.30 is a pretty important level, right? This was where we kind of had a nice little flag back when it first exploded past this level in January. And we came all the way up to 36 and then kind of came down. And you can see this was a good support level. Then eventually when we broke down, it became a resistance level. And then we just broke it the last couple of days, right? Now, the problem I have with going long right now is that 2 days ago we were at 30 or 31, right? And now we're at 33. I would say we've got about 3 points of upside. But we also have about 3 points of downside to get to the resistance level that we were at just 2 or 3 days ago. So the risk reward right now is not good. It's just 1-to-1 for a trade that could just as easily come back down and retest these lower levels as it could to go higher. So I like the chart, especially when you look at how strong it is compared to what gold has done. We take a look at the weekly chart and see what this name has done, and then we look at other gold material like gold miners and stuff, and it's a completely different picture, right? So are these guys, do they not mine? Do they do something else? Whatever it is they do with gold, they're a lot more profitable than most gold miners, right? So I think that this is a strong name and I like it, but I don't know that we have a good trading opportunity yet. Now, what could set up as a nice play would be if we get a bull flag here and we get a tight move back down to 32.50. And then once we start to break out, we could get better risk reward, and we could end up placing our stop just below that level, depending on how the price action shakes out. And then that could set up for a move where the risk reward sets up much better for a 3-point move to the upside, and then possibly for a move past it. So I think the problem right now is you missed a long, and well, you mentioned you'd like to go long at 32.80. Sorry, so you have the right price. You have the right idea. You want to see it kind of come back down, and then maybe get a push past it. And yeah, 32.80. That's actually good level. So yeah, Ray, I like it. I like going long at 32.80, particularly if it sets up a nice pattern that sort of indicates it's ready. Like if this, let's say this falls back to 32.80 today, I wouldn't buy it just because it comes back to 32.80. I think the 32.80 level is a nice spot to go long once we get an indication that it's ready to continue upwards past it. So I'd like to see a little bit more price action before it could do something like that. But if it came back to 32.80 today, then I don't know that we could say that it's not ready. It's not going to come back down to 30.80 or 31. So we need to see a little bit more of a price pattern here. I think it's early to say what your stop is, Ray. If we had, say, 2 or 3 candles that never went below today's low, right? And then we started to push past them, then I would say, yeah, 31.70, 31.80, that's a good stop. But let's say tomorrow this thing comes down to 31.60, right? And then the next couple of days it starts to make its way back up. Well, then the stop becomes a little bit more difficult, right? So I would say for now, put this on your watch list, and rather than put a buy at 32.80, put an alert at 32.80. And when it gets to that price level, then you could analyze and see if you have a price pattern that indicates it's holding above 32.40 and wants to push higher. And when you get that, then you can go ahead and put your stop and put your order. I think that's a good stop. It's aggressive, it's risky, but I think it's a good stop. Once we push past this, once we get a nice little kind of consolidation here, it shouldn't come back down to 31.70. If it does, it's likely going to come down to 31.90, 30.90 or so. So I think that you have the right idea, but we're still waiting for it to actually trigger. Okay? I do like this chart. I'm going to actually add it to my watch list because not a lot of gold names that actually perform well that I've been watching. All right, Wes, you've got 3, starting with 3M. Ooh, 3M's looking bad. All right, so let's take a look at earnings. Actually, before we do that, let's take a look at Ray's name. Just make sure. All right, so they just reported yesterday, so that's a big move. Okay. All right, so Triple M. I know they already reported. I just want to see. So we've got plenty of time on them. Obviously, this was the report here. And we looked at this, I think, a couple of weeks ago, right? So this was the major level we were watching, 181.70. It fell below there. And technically speaking, we could look at this as short-term support or intermediate-term support because it was where we last fell. But I think the meat of the price action over the last 5-6 years, this was a big level, and we're kind of below there. This thing's still struggling. I mean, you need to see a reversal pattern play out at this level. And I think the problem with it right now is that I don't know that I don't know that I would get long until it broke 182, but at that point, it feels like it's far away from a possible stopping out point, right? But um, there is a lot of upside here. There's at least 10 to 13 points of upside that could happen here, right? And I think that, as you can see, it's still a free fall, and what we need to see a reversal pattern. It's that simple. We need to see a reversal pattern, whether it's a bear flag that resolves to the upside, whether we get a little double bottom. Um, we need to see something showing us that buyers came in. Look at the last time. Look at that big bullish engulfing candle. Um, we need to see something that gives us an indication that buyers are back. I don't know that we've seen that yet. We have seen an uptick in volume. And so as price went down, volume went up, right? A lot of times this shows that we're getting a little bit of, maybe we're close to capitulation. Um, and it could be that we're ready to start to make a bounce now based off of that, but the candles don't indicate that yet. Mike, you're saying that there was a huge call block of July 200s for what it's worth, and you took some. What the hell? All right, so Mike, did you take the 200s? That's a long ways away. In 2 months. Um, so I think based off of the volume pattern, there's a chance that this could be the end of the move, but that's all it is right now is a chance. I think we need to see. A lot of times, what happens with these, if you're looking for capitulation, you'll get a big volume into the final move, which right now that volume is still dwarfed by the earnings volume. But we're getting a pretty big increase in volume, a big surge in volume into a price level. A lot of times, what happens is you get a weak bounce, then you come back and you test that level on lower volume, and then that usually indicates that there's a lot less people that are excited about shorting that level or trying to get past it, and then from there you finally start to gradually bounce higher. So there is a chance that we could get a reversal pattern here over the next week. It could even be tomorrow, depending on how strong the candle is. But based off of what I'm seeing, and based off of the last time when it tried to bounce here, and again, that wasn't really a reversal yet, but I'd like to see a conclusive reversal pattern. And at that point, I think there's potential for a 10-point move. And if it loses that, well, then you just got to get out, right? Because obviously it's going to continue. There's a lot more room to the downside at that point, a lot more room for surprises. But I think that, again, this is a key area of support, and I think it ultimately will bounce there. But you don't want to get shaken out by entering too early, or punished by entering early. So you want to wait for the right move. And I don't think it's there yet. I think we need to wait a little. Maybe ask me again next week, and we'll see what it looks like next week. All right, AMD. I'm pretty sure AMD reported as well. Yeah. All right, so if we look at the weekly chart of AMD, I would say it's interesting here. We've got a little bit of got like a trend here that's going on. And we're sort of stair stepping, right? We have this, we have that, now we have this. So when we go to the daily, get a closer picture of it, you can see what's happening here. We're in the process right now of testing this uptrend, and we're starting to maybe fail, right? I don't think there's enough yet to say that it failed, but we're sort of dealing with this. I think there's also, we've got a little bit of, you could say it's sort of a descending pattern like this. If you're aggressive, you could buy the breakout of 2740. That would sort of indicate that this trend held, and you would buy that with the anticipation that it should clear this 28 and change. It may or may not. That's a lower probability play than waiting for the breakout of everything, but it's a better risk reward play, right? Now, if you're more cautious, then what you want to see is you want to see a move back above this area, and then from there you look for a good risk reward play as it tries to break past that. And I think obviously there's a target here 30.70 and then a target 33, which I believe is all-time highs. No, actually no, there's still 2006. It got all the way into the 40s. So, but either way, that would be the next level. Would be that 33 range. I think it boils down to this and your aggressiveness. Whether you, as you can see, this was a key area. This 27.30, right? And we lost that. And since we lost it, we've actually had some good signs of buying, but not enough to push past that level. So if you're looking for confirmation that this trend is intact, it needs to break above 27.38, 27.40. And then from there, there's still $1 of resistance, but you'd get good risk reward with a reasonably close stopping out point. But your target shouldn't be at that point 28 or 29. It should be probably closer to 30 or 31. Okay. Now dollar. Right, well, dollar's just in an uptrend. It's been so for a long time, right? Um, this is a little bit like the markets, where we had this sort of climb higher, and we lost that, and it's kind of come back to a support level, but I don't know that there's enough here for me to want to go long yet. Now this is pretty steep, but if you wanted to play this to the long side, I think as long as it's above 120.40, it's in a good place and it's expected to go higher. It's just a matter of waiting for a signal to go back long and then hoping it has enough momentum to retest the highs. This was a little bit like the markets that I'm a little bit leery of. If I go long here, that it may not make it all the way back up, that it might just come halfway. But that's just me. Theoretically, if this thing, once this breaks this, it could make its move back to highs, especially depending on how this plays out. I think at the moment, we had kind of low volatility, and volatility has expanded as we've made our way down. So I think that there's a chance that this needs to kind of slowly die down in this area, and then maybe we can get a move back up. Or it could V-bounce. But I think either way, we need to wait for a better entry signal than what it is. Right now, this is we've discussed this concept before about how you need a good price level as far as somewhere you want to enter, but you don't just enter because you're at a price level. You still want to see a price pattern indicating that that price level is going to work. And I think Dollar Store, or, Dollar General, whatever, they're very close to a key level, but I don't think we have a pattern yet saying that it's ready for a trigger to enter to go long. That we have enough buyers at that level, right? So I think that's all we're waiting for on this one. Is we're just waiting for a better pattern indicating that it's ready to go long. All right, and then final request, Keith. You're looking at shorting Weight Watchers, or what do I think about shorting Weight Watchers? That's a tough call. So Weight Watchers has been in a very ugly downfall, right? Let's see if we can gauge some long-term price levels here. All right, so All right, that's one. That's one. This one could be 12, or it could be, we're just going to go with 1060 or so. All right, so if we look at it, we're just looking at it in the broader sense of where it's at, right? So it's in the middle of two important price ranges, right? Which is about $20 and just below $30, right? Now, next big thing we can look at. I don't think there's a trend line that really works here, but we're going to do this one. So we had a descending trend, and I think it gapped down and then it accelerated to the downside. I think even to this extent, we can almost say that this trend was up to here, and then at this point we had this, right? I think that's how I would interpret the price action, right? So we could put a lot of this breaking down in the rearview mirror because that's not important right now. What's important is what's happened recently, right? All right. So looking at it now, we had a gap down. We had a base. It broke below that base and then it broke above. And right now we had a gap up. If you want to short this, I mean, it's such a weak name that I could understand your desire to short it. But I think at the moment this is still a short-term bullish play. Because we had a gap up and then we have a bull flag. Now, once it got to this range, I think that's a very good short. This thing has been a disaster, right? So definitely I can understand it just gapped up, you want to short it, but at this point, if you short it today, what do you have? You have 2 points of downside, and actually 2 points to your stop, which would be the gap. If this thing were to move up closer to 28, then you'd have 9 points of downside, with maybe 1 point of upside for your stop. May not get all the way to 29. Maybe it tops out somewhere up here. But I think at the moment, it probably has one more impulse up, at which point then you can look at maybe wanting to short it. Now, again, this actually looks like a reversal, but it has tried to reverse several times and failed. So if you wanted to short this, I could get behind it once you get to a better level. But the concept we were discussing before about levels and setups, I think at the moment this is not at a level that's important. It's right in the middle of what is now a support level and what is a resistance level. And it's at 22. It still has 6 points to get to its resistance, and still has about 3 or 4 points to get to its support. So I think it needs more time. I think this thing probably still has another bounce coming. When did it just report earnings, or did it report? Why do I not have any? Not sure why it doesn't have earnings. It obviously has reported several times. I don't know if they changed that. They didn't change the ticker, right? It's always been WW. Oh no, it used to be WTW, right? May 2nd. So it should have. Do we have a WTW chart? Does that still? No, okay. All right, so yeah, I think I understand the idea and the allure of shorting this, but I don't think it's at a short yet. I think it needs more time. It's not. It's at the moment. This is actually a bullish reversal, so you need more time for more bears to get in and get better risk reward. Okay. All right, guys, that covers it for today. Thank you for those of you that attended. Thank you for participating. I always appreciate the ability and the opportunity to sort of discuss some of these trades, and I really enjoy reading charts and kind of going through stuff like this. So it's always great when you guys have charts for me to look at. Hopefully you guys are doing good with your trading. I know the market's been in a tricky spot over the last couple of weeks. Um, if you ever have any questions, feel free to ask. You can email me. You can stockdarts@gmail.com. You can ask me on Twitter. You can ask us on our Discord, and I'm more than willing to help out. And if you need more help and you're looking at maybe some mentoring, you just feel free to ask me. We can always set up a plan, whether it's a 1 or 2 day thing, or whether it's a week plan, or whether it's something that maybe needs a month or two if you're just starting to get into trading. And I'm, again, more than willing to help out along that nature as well. Other than that, I hope you guys have a good rest of this week, and we will meet again next Wednesday.